Welcome, Wall Street Tactical fans. Today, we have an episode on the massive movement in the Chinese stocks in the market for the past week. We're going to analyze what happened, what's going on, and what to expect in the future. So, one of the big stocks that we covered this week is probably the largest stock in China, Alibaba. And that has taken a massive turn, including a very recent announcement that they're upping the buyback to 25 million, which led to a 10% increase, which was compounded on top of the other massive increase from the week prior when the Chinese government said they were going to support the Chinese stocks in foreign markets. So, you have any comments on that, Sam?
I think globally, the entire market is seeing a lot of instability. There's a lot of unrest. And in particularly China, I think, there's always going to be a need for them to position themselves as a stable, powerful force globally. So that's pretty much, I think, the macroeconomic principle that's moving a lot of micro movements in decision making.
Yeah, absolutely. So, one thing to note would be China's involvement in the war with Ukraine, because Alibaba had started out over a year ago at a peak of above $300 per share. And then all of a sudden, it has tanked recently, went all the way down to just over $70 per share. And
Right.
it's bounced back up to a little bit over 100, but certainly the Chinese stocks have tanked since the war on Ukraine has started. And that's probably due to the macroeconomic factors that you're talking about.
Yeah. So I think to continue on that train of thought, look at Alibaba, right? $74, now up to 118, 116, and hitting kind of new ranges, right? And we thought Alibaba was already a great buy at around $105 a share. Now going down, it dropped to $74 a share, shot right back up in a huge candle, right? So then what was really the catalyst for that? Was there a bounce back from the bottom that maybe that was the absolute bottom, that nobody was going to sell their shares any longer because they realized that was the best price to buy in at? These type of opportunities are deals that can impact an entire trading year, right? So definitely looking at catalysts like that are very important. Some of the key things that when you see it dropping down to another low like that, the resistance level, right? Did it stay there? Did it drop below? And some of the apps that we've tried, like Mastermind, which is going to be coming out soon, will kind of show when you have key indicators that tell you, okay, this is the bottom, grab it now, hold it, sell it later. These things really, really help. Now, Alibaba has been a company that has a lot of revenue. We know a lot of wholesalers use Alibaba. It's well known in the industry. And I think a lot of that price drop was due to fear. And a lot of that fear kind of will really curtail itself in the next coming weeks. We'll see. But there is still the threat of inflation, right? That could hurt, and the global logistics problem that could hurt Alibaba's business. So it's important to be optimistic when you see a bounce back from 74 to upper hundreds, over a $30 move on a stock with such a high market cap, right? But then also important to understand the realistic practicalities of what's happening with inflation and with logistics.
Yeah, and it's interesting to note that Alibaba has hiked their buybacks a couple times in the past, and each led to a local, maximum in the short term, but then ended up decreasing still after the slight bounce up. So, do you see something like that, something similar to that happening?
I don't like to speculate. It's not a good idea, but I would say that uh, in the markets right now, we're seeing um, a lot of uncertainty. Like I said earlier, even with the Ukraine crisis, there seems to be light at the end of the tunnel. When there's something like that, there may be another catalyst. There will be a lot of world-changing catalysts that continue, right, during the course of the next year. And one major thing that consumers are seeing and the discretionary income to invest, increased gas prices at the pump, right? That will affect liquidity in the markets.
Yeah, absolutely. And Alibaba is a powerhouse, within the world. It seems like there's pressure on both sides. So one is that they've been, getting lots of fines from the Chinese Communist Party. You know, part of the conflict with the Communist Party led to Jack Ma being outed as the CEO, and he was also, the founder of Alibaba, and numerous fines. And they're also receiving pressure on the other side in terms of, they have a cloud computing company that is growing to compete against Amazon, and they're going to be relying on a lot of foreign markets. And if China has issues and, say, intervenes in the Russian war against what other countries like, or if they attack Taiwan, then that could certainly impact Alibaba as well. So it seems like they had pressure on both sides, but it also appears that there might be some relief that they're receiving based on what the Chinese Communist Party had come out with regarding, support for Chinese stocks.
Yeah, interesting. I mean, I think it's always going to be a system of we want to encourage entrepreneurship, but not too much in China, and nothing that complains or doesn't make sense with global views of the Chinese ruling party. But in a business standpoint, I think logistics, inflation, these things are going to really decide how much money is spent with a new brand in cloud services, which there'll be a new brand, and then the political aspect of how their cloud services is going to be able to sell in foreign markets,
Right.
especially with competitors like AWS, GCP, who have really dominated the market.
Mhm.
Now, that being said, I'm sure they can gain some market share, and it is a very lucrative business, as AWS has proven to be. Telling everybody that, hey, this is a huge chunk of capital that we're able to keep coming in off of this business. So of course Alibaba wants to get a piece of that. Now that shows, if they're able to capitalize on that, it shows tremendous upside for their stock. Whether they're going to give it back to shareholders in a dividend, I don't know. But if they did, it would be a very good proposition for retail investors and
Yeah.
institutional.
And they are giving back to shareholders, not necessarily in a dividend now, but in buybacks, because they did promise $25 billion, which is, approaching 10% of their market cap in buybacks. So that's a non-trivial amount that they'll be, giving back to shareholders, which, can be more efficient because of the taxes that you have to pay when giving out dividends as compared to, going straight with buybacks, as
Yeah,
Berkshire Hathaway supports.
right. Well, either way, it's anything that will make it a more attractive purchase for a prospective investor would really help Alibaba's price, and that's one of the stocks. There's another stock, MULN, that we'll be discussing as well. But any other news about Alibaba and just the market on that side of the sphere in general?
And there's a couple more Chinese stocks that we had covered on this channel before. So one is Momo, and the other one is 360 Digitech. So that's also QFIN, so QFIN on that's their tickers.
Mhm.
And those companies do have dividends, and they were quickly approaching 10% and had even passed that threshold in the recent decline, but both have
Mhm.
come close to about doubling since the period in which China said that they would support their stocks. And QFIN had a P&E of around 2% or 2, which means that they would essentially earn their market cap in 2 years, and
Mhm.
that's kinda wild.
Right. And right now, I mean, it's seen a price drop since, it's $40 a share mark. I think it's trading near 17 now. And
Mhm.
and regardless of that, I think QFIN, it does have a 6% dividend yield still.
Yeah, and Momo has a special dividend as well,
And
that
over
comes.
1,600 employees. Um, I think employees are a big indicator of how big the company actually is. So
Yeah, and Momo has had a recent drop in terms of earnings, but QFIN has been growing earnings each year, and even Momo is projected to continue to increase in the future. So those are 2 to definitely keep your eye on with, 1, their dividend, and 2, uh, what we expect in terms of rate of return, because their P&Es are very low and, they're projected to have increased earnings in the future. So those are 2 to definitely still keep your eye on.
well, I mean, I think that with Momo and QFIN and Alibaba and many of the Chinese stocks, you see opportunity there, but what are the US counterparts that are in the same space? And always kind of keep both of those things in mind when taking an investment position if you think it's going to be long term or short term. Um, a long term play or a short term play decides, what type of trader are you? And either way, it's always important to be cautious, but to know when to pull the trigger on an aggressive move that could lead to multiples in return.
Absolutely. And one more point, before we move on from Chinese stocks is that'll be interesting to watch in the future is the fact that China might have an agreement with Saudi Arabia for a deal in terms of having gas prices or oil prices be in China's native currency instead
Yes,
of dollars. And
yes.
that could affect the value of both the US dollar as well as, the yuan from China.
Well, the US dollar is still 80% of the oil purchasing transactions. And I think that that will increase if the US pushes hard. But right now, China is pushing to take more market share and really try to actually. And I think actually there was already a deal, as you said, that is
Mhm.
considering and going to allow that to happen. So those are very serious implications that are looming for the United States.
And just to expand upon that note and how that would impact investors looking to invest in China versus US stocks is if the yuan goes up in value as compared to the US dollar, that would mean that all the earnings in China would suddenly become more valuable for us as US investors. But if the US dollar gains against China's yuan, that would mean that the stocks would be less valuable and the earnings would be less valuable. So that's definitely something that's very important to keep your eye on.
Mhm, mhm. But logistics and the symbiotic relationship of China and US has now become so integrated at the hip that it's just they're both required for each other's survival.
Yeah, yeah, absolutely. So that's all we have for this episode of Wall Street Tactical. Thanks for joining us, and we look forward to seeing you next time.
And be sure to like and subscribe if you found any of this valuable. And thanks a lot.